Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. The overnight strength that we saw carried into Monday's opening. We witnessed a very strong rally with the NASDAQ being up over 2% intraday and the S&P trading into that target range that I talked about between 33.97 and 34.04 with a high of 34.02.93. Market reversed from there. It was actually a fairly sloppy close, but we closed positive on the session. Overnight, we're just seeing continuing chopping around. There has been a positive tone for most of the session. That's likely to continue ahead of the Fed's meeting on Wednesday. Now, if you read the news lines yesterday, everybody was telling you that the strength yesterday was about with NVIDIA and et cetera. I still think it's about the expectations for the Fed this week. Maybe that helped market sentiment a little bit, but I don't think it was the driving force, really. I believe there's a number of things that market participants are watching very closely, and the Fed is certainly the big one. As we come into today, the rest of the week is going to be very interesting, and this is a subject that I haven't talked to you folks about, but there's a theme that has been building over the last several weeks. With the split in Apple and Tesla, we saw a huge amount of new stock on the marketplace, especially with those two stocks, as they are large capitalization stocks, and there was a lot of new supply on the markets. Now it appears that a lot of these unicorns are rushing to market to IPO this week and next week. This week we have Snowflake, JFrog, Unity Software, and Sumo Logic. These are big offerings, as they're going to be pushing 75 million new shares out on the street. Now somebody has to buy those, and they're going to be distributed across the street, and possibly this will cause some folks to sell some stock to buy to play into these IPOs. But the real issue here is not that. If one of these offerings don't go well, that could set a very negative sentiment. As I've been discussing in the markets for the past several days, we're at a critical juncture in the markets, and it won't take much to roll this market over. Now, a lot of folks think because of my thumbnail that I had last night that somehow I turned bullish. Our models and our database remain heavily in cash and taking protection in this market. I am not bullish at this time. So as we go through this week, we're going to continue to watch both the 40-day and the 10-week moving averages, as I believe those are going to be the key trigger points. I'll go through lots of details here in a minute in the technical section. As we come into today, we have two economic reports coming out: industrial production and capacity utilization. I don't expect anything big there, but remember my theme is that September numbers aren't going to be as robust or the positive surprises that we saw in August and before coming out of Q2. I still believe these numbers are going to be very choppy, and therefore we're likely to see some hesitation by market participants, especially ahead of the FOMC meeting announcement that will be out on Wednesday, along with Chair Powell's conference call. But as this week unfolds, there's going to be plenty of volatility. I set you up for that, and the fact that we were able to trade higher yesterday doesn't mean the market's turning. As I'll show you in a minute, our database reacted very minimally to the upside that we saw yesterday, and in fact, just about everything was a muted response to the rally that we saw yesterday. So the markets remain in a very vulnerable state. Let's go ahead and take a look at the charts, see what they're telling us for Tuesday. Reviewing the WaveTech database, as I mentioned in the opening comments, we did not see a lot of rotation coming in yet. We did see about 560 new buys versus 140 sells, so there was a net bullish ratio. The database improved from 14.5% bullish to 15.50. Now, this is not significant, and as I've been discussing over the past several days, if it stays below a 26% bullish ratio for the next couple of weeks, that will set up further downside before these stocks will be able to recycle. So I'll be watching that very closely. There's only one long sector which continues to remains stable, which is transportation. It is at its peak holding, so this could exit any day and we could be 100% out on the sectors. Groups right now are only 20% and symbols 15.1. As we review the S&P futures, I've been talking about the importance of the 40-period moving average. At this time, it is at the 33.51 level on the futures. A close below that would be negative, but it appears that we're going to continue to grind right above that level. S1 on the grid is 33.54. So far, the low overnight's been 33.66. The high's been 33.90. It's went just above R1, 33.89.75 with an intraday high of 33.90.25. Now it's backed off of that just a little bit as the markets are grinding out right before the London Open. But the configuration suggests that we still have a downtrend as PPM1 is a minus 30 and the 10-period moving average above the markets at 34.07 will supply a substantial amount of resistance. So right now there's only a 30% probability to rise above that level and close above it. So therefore there's a 70% chance that we will hold this level and the market will continue to edge down. And I mentioned in last night's video that I thought we would be sandwiched between the 40-day moving average and the 10-day moving average. And that range is 33.51 on the downside, 34.07 on the upside. It matches well with S1, R2. There does appear to be a bit of an upward bias overnight. We're seeing the NASDAQ up about 0.5%, and we're seeing that the S&P futures up 0.4. So there is a positive tone as we come into the open. But as I discussed in the opening comments, I think prior to the Fed's meeting on Wednesday, we're going to remain positive. Market's going to continue to grind out in this reasonably narrow range. After yesterday's positive action, the market grid on the cash did actually turn higher. It's a slightly different configuration that's on the futures, and this suggests that the major resistance is between R1 and R2, which is 33.98 to 34.15. The 10-period moving average is 34.28. It's dropping about 12 handles per day, so that's going to map out perfect to the market grid tomorrow, as we're going to have a 34.15.90, or basically 34.16 as an R2, and then on the downside 33.68 is going to be the key number, and the 40-day moving average right now is 33.62. So there's a nice map with the grid as well with the moving averages that I am expecting to see the market trade in. Now the downside is more vulnerable than the upside right now, mainly because the PPM3 is at a 0.12. There's some moderate support there, but there's right now a 60% probability to trade below that level. So if we do see some weakness come in, it will be very easy to penetrate through this number. If we get below that 33.68, S2 is 33.51, S3 33.34, and I discussed in last night's video that the 33.30 level is the 10-week moving average. That will continue to be substantial support for the next several days. Next market is the NASDAQ. The NASDAQ has a more negative profile than the S&P does. It goes with that story I haven't talked about for the last several days as far as the rotation to the mid cap, small cap, and even the S&P should perform better than the NASDAQ. Now we have PPM1, a negative 0.68. That number right now is at 11,523. The high so far tonight has been 11,329. We look at the grid, R1 is 11,357, so we're just below R1. R2 will be substantial resistance at 11,459. S1 11,175, which is a bit below the 40-day moving average. Now, the 40-day moving average has virtually no support characteristics at all at this time, so penetration has actually a 80% probability if it trades through there, it will continue to go down. So there's definitely vulnerability in the NASDAQ, more so than in the S&P, but even then the support is very weak at this time. The main number to watch is going to be this 10-week moving average, very similar to the 40-day moving average, 11,158. If we close below that level on Friday, that will be significant. That will be the second week down after a major reversal that we saw 2 weeks ago. The best possibilities right now is a sideways trading range with a downward bias for the next 2 to 3 weeks. And I mentioned this before, and it's the same thing on the S&P. We could trade as low as the 21-week moving average. So nothing's changed from the analysis. Yesterday's strength felt better than it was, but nothing really moved. The database didn't move. The PPMs really didn't move on a daily basis. So there's very minimal reaction to the activity we're seeing in the markets right now. As we take a look at gold, it is actually trading above all of its moving averages. The key average in this pattern will be the 1965 level. We're currently trading 1973, so a close above that level, we'll start to see some expansion on the upside. But so far, the PPMs are not responding to this. So the close tomorrow will be very key. If we do close above the 1965 level, that'll be a positive, and we're likely to see some higher numbers. But all of the answers in this market are on the weekly chart. As we look at the weekly grid, 1965 is R1. So we've traded above that now at 1979. Next level, 1984. So we're close to an R2 weekly. And above that is at 2004 R3. I mentioned this in yesterday's video that 2001, the high of 2 weeks ago, a break above that level will set a move to around 2015, maybe a little higher. But it doesn't look like we have the momentum to break this market out yet. So going back to the daily chart, expect this market to trade as high as the upper part of the grid at 1988. If it did close above 1982, then it's possible to start to move toward that 2001 level that I just discussed. But for now, it does appear we're trying to set up a bottom here, but the configuration on the PPMs on the market grid do not suggest that this market's likely to move a lot higher out of this pattern. This will complete the video for tonight. Thank you for watching, and we'll talk to you tomorrow night.